running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good morning, Quasar Markets Live. Howard here with your morning pre-market prep. News so far is definitely going to be PPI data just came out hot. Let me try to grab the data here as it's coming out. Looks like 0.5% month over month. They were expecting 0.3, I believe. I was trying to read it off of Twitter there, and then feed just went off on me. So give me 1 second to pull this up, everybody. Let's see. Where is it? Where is it? Is it here yet? Well, bottom line, hot. And what it's got is not a, well, it is moving down now. Let's get this into a 3-minute chart so we can see what is actually happening. And no huge move, it looks like, on the Q so far. We're down about 93 basis points here, 603.48. VIX, though, did jump a little bit on this news, 2137. So you can see as that hit, it did cause a spike in the volatility index. That's definitely something to keep an eye on here. Let's take a quick look through our rates also, because they tend to move quickest. And it looks like a drop down on the 10-year and on the 30-year maybe. Not a huge move, but we are under 4 on the 10-year now. So that is a big move. Overall, we are under 4 for the first time here since back in November when it comes to the 10-year. So a little bit of breathing room there. 30-year down at 4.64. That one's at risk of going down to lows we haven't seen since October. So rates are moving down. That's usually good for risk on assets, right? Because you're not going to be able to earn that yield off of treasuries right now. So let's see how that starts to play out as we look at what's going on across the indices. As I mentioned, as of right now, the NASDAQ is down about 76 basis points towards the low, quite honestly, or actually at the low of the session. So market is moving down now a little bit on this news. We see the same thing across the S&P through the ES. Excuse me, sorry. Down about 73, 74 basis points here towards the low of its day. And the Dow is down almost a full percentage point now, down about 94 basis points. So we are seeing a continued move here to the downside as PPI numbers come out. I'm just trying to see how far of a difference. Yeah, it's a pretty big difference. About less than an hour ago, the Dow was down about 61 basis points. So now down, another 30. The S&P and the NASDAQ basically doubled their drop or their pre-market lows in the last, since this news came out. So far, really not a strong move there. VIX is continuing to move up here at 2152. I don't see, I'm just making sure nothing's hitting here news-wise on a, bigger level with Iran or something there, but not really. So this is PPI, related, and it does show inflation is, definitely within the mix. And it says wholesale prices came in or rose 0.8%. In fact, let's pull up TradingView. Will give me all that data. Give me 1 second here. So yeah, it came in at 0.8. They were forecasting 0.3. It was 0.6. So moving, and they thought it was going to be moving in the right direction, moving in the wrong direction. Core PPI at 3.6, expected 3. Again, moving up from the 3.3 level here. So we continue to see the same thing here where definitely have weakness in the market right now. Inflation definitely on the forefront of everybody's mind. At 9:45, we do have some manufacturing indexes coming out. The Chicago PMI will come out, and then we've got some construction numbers and other things later. But that's really going to be the bigger news. Has already come out on that, so that is going to be what a lot of folks are looking at here this morning. And again, everything seems to be hitting new lows as we speak. Let's see what it's doing also across the Mag 7. NVIDIA pretty much at lows, down another 1.68%. Again, this thing since earnings has gone from 197.67 to 181.77 after absolutely crushing earnings. VIX is continuing to move to the upside here, 2163, as I'm trying to keep my eyes in a bunch of different places here. Apple moving down again today too, down another 41 basis points so far. Google also down. They're not down at the bottoms though, like we've seen across NVIDIA, which seems to be getting the most pressure. Microsoft taking a pretty big hit overnight too. Software again, it's been the story, and it continues to be the story. Software weakness. Amazon down about 1.5%. Meta down about 1.5%. Tesla down 1.2%. What is not down today is Netflix, although I don't know. Let's see if we go. Let me look at it over here and tell you. And that's on the news that they are stepping away from the deal to purchase Warner Brothers Discovery. So Paramount has won that bid, and Paramount Skydance will, it looks like everything will at least proceed, and we'll see if it goes through or not. Sorry about that. A little sore throat there. So Netflix up about 8.41%, but that's what we're seeing so far. And again, they're walking away from that deal to buy the Warner Brothers Discovery assets, after Warner Brothers Discovery's board did say that they felt that the best bid was Paramount Sky. Does have Paramount up about 4.11% today. They were up 10% yesterday. So traders are awarding them or rewarding them for their move here. So nice move to the upside. Netflix moving to the upside. Warner Brothers was moving to the upside. Let's see if it still is. Actually now down about 83 basis points. There, some of the bigger things that I was taken away from it is that, number one, Paramount is going to pay the $2.8 billion breakup fee. So Warner Brothers will not be on the hook for that. And, basically Netflix's CEOs came out and said, it just wasn't financially attractive anymore, that they had hit the price where, that return for them just didn't make sense. So, I don't think it's going to be that terrible for Netflix. I don't know. They are buying the whole thing. So that, that legacy TV part that wasn't really going to be a part of the other bid is, back in play now. So it is the entire entities. I think that gives some headwinds to Paramount, but it does put the Ellisons front and center as, this generation's Murdochs, I guess, right? Rupert Murdoch and his family was the sort of leaders or news barons of the last generation. Now it looks like the Ellison family wants to do that here. So, at least clarity. Traders like clarity, that's for sure. That is definitely the case. Seeing breaking news that OpenAI raised $110 billion at a $730 billion valuation. Wow. So not even a public company yet, and almost $1 trillion company. We only have, where are my mega caps here? We only have 10 $1 trillion companies. Walmart's fallen just below it. So is Eli Lilly. That's been above it, in JP Morgan. These are basically the 13 companies that have been trillion-dollar companies. And, amazing that OpenAI is raising at that $730 billion valuation. That's going to probably be the first question I have for BigBeat when he comes in about that, and what his views are there. I talked about Nvidia. That's still on everybody's minds. Down another, like I said, 1.8% here, down at 181. Man, for me, it starts to look attractive. We don't tell you what to buy and sell here, but that is definitely starting to get into an attractive zone. Especially if we see any more further weakness down towards the bottom of this linear regression in that 175 area. I absolutely love it. So, that's what I'm seeing so far across the Mag 7. It's going to be interesting to see now if we still have the same movers and shakers we did earlier. So I've got to sort of relook at everything on the fly after those PPI numbers have sort of changed what was. Well, let's see if they did change what was the movers so far this morning. Hopefully not too many changes here. Okay, well, the good news is Block is still the biggest gainer in the major movers this morning. XYZ, Jack Dorsey's company, up after their earnings report yesterday. Here's an interesting twist here. And the second thing I'm going to talk to BigBeat about is this. They announced that they are going to lay off almost half of their staff. So keep in mind that this stock is moving up. One of the major things moving it to the upside today is the fact that they are laying off about 4,000 employees. They said that for this is what's needed for the next phase of their long-term growth. This is, Block is the company, the parent company of Cash App. Jack Dorsey was the co-founder of Twitter, big Bitcoin maximalist gentleman. They are very involved in Bitcoin plays along with their other side, their blockchain technology. And they just said that they don't need the people anymore. AI is doing those roles. So again, its actions speak louder than numbers to me. We keep on seeing these jobless numbers that aren't that bad, right? But then we keep seeing reports like this. So what's missing here? How bad is that lag in that report? We brought it up yesterday, BigBeat and I said that, the job, because the numbers came out Wednesday, right, is they were better than expected. And I said, I don't trust them because this is what we keep hearing. Maybe it's just that they lag a little further than people realize, or I realize, and it's going to catch up now. But, this isn't there. And, they came out and said that they won't be the only company making similar decisions to this. Again, it has them up almost 20% on that news. So for their price, it is good. Another one that's up tremendously today that's interesting, and a negative for me on crypto. You might say, wow, that's a weird take, but Mara, the largest Bitcoin mining company by hash power, is up about 12.5% today. Normally you'd say, man, that means Bitcoin's probably up, and that's good news. The reason they're up so well is that they are pivoting, like others in the sector have already, into the data center business. So they're going to reduce the reliance on Bitcoin. They announced their joint venture with Starwood Digital Ventures, part of the Starwood Capital Group, to use about 1 gigabyte of advanced data center IT capacity that they'll lease out. So they're getting into the data center space. We know IREN is in that world, right, or has moved to that world. We know that recently activist investors have been pushing Riot, RIOT, in that direction. TerraWolf, WULF, is another company that's moved into that area. Cipher, CIFR. But to me, this is a little bit more interesting because, again, I mentioned Jack Dorsey, Bitcoin maximalist. So is the CEO, Fred Thiel, of Mara. And not only is Mara a Bitcoin mining company, but they are a Bitcoin data treasury company. So they try not to sell their Bitcoin. They try to hold it on their treasury. And they, at one point during this year, had been raising money through the same sort of maneuvers that MSTR uses to purchase Bitcoin for the digital asset treasury. So this is a shift on that. And to me, a little bit negative on Bitcoin. And Bitcoin was, I didn't go over that in the open, was under pressure earlier today, played out a lot about how I mentioned it yesterday on the show, talked about the fact that we probably see about a half back retracement. We talk about, on Wednesday, it made the move from 63 on, 750 or so up to that 70,000. So a lot of times we see a natural retracement to about the half size of that. We've seen that now. That is that 66K area. So this is the make it or break it time. So far, pretty good reaction. It is moving back, or at least it was moving back up a little bit. It's going to be tough to see. ETF inflows on crypto were good again yesterday. Another $250 million moved into the ETFs, especially IBIT. IBIT was the big mover there. There wasn't much until they reported. So that's strong, but I'm really going to be watching it today, because today is going to be the test. And what I mean is the folks that have been buying it up the last 3 days, and it's now up $1 billion in the last 3 days of inflows into the Bitcoin ETFs. Now they're at a loss, most of them, on those positions. Was it really institutions that bought that? If it was, then that's going to be positive for the industry, or positive for price movement on a longer term move. But if it was retail hands, they tend to turn those shares over and they won't hold on to them. And that could exacerbate the move back down towards the 64,000 level. So that's what I'm watching for this morning. Same thing, Ethereum regained or stayed above the $2,000 mark, but it has pulled back about half of the gains it saw on Wednesday. And that goes through most of them. Solana, very similar sort of setup. And again, on a lot of it, we're seeing some spot accumulation, but the perpetual futures are what's driving it. It's been, it was short squeeze that definitely led us up on Wednesday. And it's been 2 days of sort of, lesser level, but still significant long liquidations that have been moving us back to the downside. And we're at a key spot. We don't want to see, if Ethereum breaks below 19, you're looking for that to retrace towards that bottom level at 1850. Like I said, on Bitcoin, it's, right about the level we're at here, but it's really 65,750. If we break below that, we could hit more problems there. So, and what we'd seen is Bitcoin had been a good harbinger for a couple of days. When it made the move up on Wednesday, tech followed. Yesterday, Bitcoin with its early rise and then late fall, very similar to what we saw across. It was trading almost in tandem with the Qs throughout the afternoon, especially the late afternoon. So do stocks follow it? But again, that was all before the PPI data. That is the mover so far this morning. VIX cooling off a little bit here from the highs we had seen, so that's good, but still elevated again, 2116, made it up to about 2164 here this morning before this little bit of a pullback here in the last 10 or 12 minutes. But we'll see what we get there. Other things that we, keep an eye on today, Anthropic has been definitely in the news with, the government, with the Department of Defense. They're not backing down from the fact that they don't want to just allow their, Claude to be used however the government or the Department of Defense wants to. They want some promises that the DoD won't use its model for fully autonomous weapons or mass domestic surveillance. Pentagon said those are both illegal anyways, but won't commit to that thing. So it's one of these, Mexican standoffs here that we're in right now. But that could have, that could have some reverberation through the entire AI complex, in my opinion. So we'll keep an eye and see how that, does play out with through it. Let's see if I can find let's see the latest breakdown here on the PPI. Okay, I'm starting to see a few of them here. So final demand rose 0.5% in January, acceleration from December's revised 0.4 monthly advance, says the Bureau of Labor Statistics, translated to an annual rate of about 2.9% compared to the 3% rate that was logged in at the end of last month. Economists had forecast the price would rise about 0.3% month over month. And so remember the one core PPI, which excludes food, energy, and trade, rose 0.3, again pushed the annual increase to 3.4%. They had, expected, like I said, it's hot. It's a little hot. It doesn't seem to be crushing us yet, but it's definitely putting pressure on the risk assets. As I mentioned, the NASDAQ, SPY, and Dow all basically doubled their pre-market drops once that data broke. So it has definitely had, an effect. It hasn't had an outsized effect yet, would be, I guess, my takeaway so far. Rates initially moved to the upside. They are now sort of moving back down. But again, 10 years under 4 for the first time since November. And if it drops down below 3.965, it will be rates we haven't seen since last October. So for those of us that are looking to get discounts or renegotiate or redo our mortgages, we're getting to that spot, and mortgages did break below 6 for the first time yesterday. Hopefully we can see a little bit of a drop, and I'm in a spot where I can finally do that. For selfish reasons, that's what I'm hoping for. Gold is at 52.17 here today. So again, hedges are playing to the upside slightly. Silver just jumped back through 92 towards the highs of the day. So we are seeing risk off in the commodities market move that way. I don't like seeing that gas has moved up again about 3.6 and 3.4% here between WTI and Brent as we're getting, towards the weekend. And the takeaway there, as you guys all know, we've been talking about it, is that, a lot of that's a play on what's happening in the Middle East. Yesterday, most of the news had been fairly positive there. Oman, so we'll see how that plays out here, but that does seem to be cooling off in the wrong direction there. So that has me a little bit on edge. Also, looking at the overseas markets overnight, the Nikkei pretty flat. Looks like Hong Kong's up about 1%. So might be able to look at energy today as a strong sector to keep an eye on for moves to the upside. Gold and silver miners would be plays today to look for to the upside if this sort of continues. So there are plays for you, sectors that will be winners. It looks like it could be a day where it's defensive again. And we could take a look here at financials. Over the last couple of days, financials had been gainers throughout most of this problem. So if this is the case, do we see a move back up by JP Morgan today that's down about 2%? BOA, Bank of America. Oh, no, it's not. Let's check Wells Fargo. Wells Fargo, that's down 2% today. Again, these names were moving up as defensive plays. If VIX continues to rise, if tensions seem to be getting ramped up and gas continues to move to the upside, if gold and silver continue to move to the upside, those would be things that I'd be watching for. Those would be the sectors that move into the defensive plays. And if we take a look through the different sectors of the S&P so far, we do see energy is up 1.4%. Again, that is not a surprise based upon what we were already looking at with the WTI and Brent, up at 55.82 here towards its 52-week high. which is 55.93. So right up against it here. Sectors under the most pressure, as we know, XLK, which is technology, down about 1.63% here this morning, added 138.71. So technology continuing to be under pressure. And that was, I will say, yesterday there were some real good winners within the tech sector, but if NVIDIA and Apple, the two huge heavyweights that are so weighted into the S&P and into the NASDAQ, have a rough go of it, it's hard for those indices to really make a move. So, NVIDIA to me will be the one I'm watching to drive the bus today. If it starts to see that finally the buyers buy in today, then that could be what moves the Qs. That's what gets the indices restarted and starts to get the market moving to the upside. If they continue to be laggards, then I think the market melts down today. That's my general outlook so far. We'll see what BigBeat thinks in a few minutes here when he comes in. DXY, the dollar is up slightly, but it's really been locked in at this spot right below the 98 level. And that's really sort of a in-between level. And what I mean there is it's just sort of a neutral level. It's not overblown. It's not underdone. It's just about right. Take it out of the oven. It's perfectly browned right now. Other movers and shakers we've been watching this morning, or you need to keep an eye on. Dell had a really good one. If I'm not mistaken, I think BigBeat said he's talking to them today about a new computer, but Dell up about 11.21%. So news of BigBeat's imminent purchase might have already hit the airwaves, but a nice beat. They had a couple of great things to say that, it wasn't retail. They did say retail was part of the growth, but they did point also, especially to the AI server business for them. They're managing their costs when it comes to memory pretty well. And what we've seen, I think my takeaway from that in general is, same thing NVIDIA said. They're just raising prices because they're charging business customers. It's not they might be keeping prices in line for those of us retail purchasers of single computers, but the big buyers of bulk are getting hit with those price increases are getting moved across to them, which again, with the PPI that just came out, would lie right into all this again. So thematically, a lot of the stuff that is playing out and that we are seeing in there will do it. I want to get BigBeat in here because we got to talk about what's going on. Like I said, you guys already know the few questions that I have for him. Let's play his intro and see what the big man has to say today.
When markets move, Stephen E. Orr takes the chair. From the White House to Wall Street, he's spent decades at the intersection of policy, markets, and real capital. And he's seen firsthand how institutions use data behind closed doors. Now, as founder of Quasar Markets, his mission is to pull those signals into the open so everyone can see what really moves the markets. This is Stephen E. Orr, BigBeat on Wall Street. Let's filter the future live.
BigBeat, happy Friday, brother. How you doing this morning?
I'm good, Howard. I'm, everything that we talk about on the show is playing out in real time, and that's why we discuss the issues. I know sometimes it feels like it's pontificating or whatever, but the idea is to get these ideas that are in our head and in front of us and put it in a way that people understand it so that they can make better decisions. And I think that's the key here. And one of the things that we've been talking about is inflation, and here it is right in front of us, right? And the Fed has been dead wrong the whole way through, saying, oh, well, here's the reason, and here's the reason, and the storms, and I'm trading on this.
Yeah, all you had to do was go to the store to see what was going on. Look at your
do is go to the grocery store. That's right. Yep.
Yeah, look at everything. And then Steve, the other one that you nailed that we talked about on Wednesday, jobs, right? Jack Dorsey, our boy, Mr. Bitcoin himself, their stock's the number one gainer right now. Why? They're going to lay off 40%, 50% of their workforce, 4,000 people hitting the job market. And these are not low-paid jobs. These are not entry-level. He's saying all the way from sort of not the C level because they don't cut themselves, but everything below that, watch out below.
Exactly right.
And he said they won't be watched for more. And now analysts are saying that. So, we know Paul V has been telling us that, right, from Higher Capital, and we've been saying it. The numbers haven't matched up. They're not matching up.
That's not
this
from
is
a
do
chart.
your own channel check, right?
That's exactly right. That's not from a chart. That's not from news. That's not from some talking head. That's telling you exactly what's happening in the markets, real time, putting it out there. And it's not hard to understand. Go talk to your neighbor. Go find out what's going on. Get out. Go to the grocery store. I don't know. Go to Costco. See what's really happening. If you sit behind a desk like I do all day long, and you don't get out and you don't see what's really going. You don't go to restaurants. You don't go to you're not going to understand what's happening, right? But if you do, and you do act and do what the main players have done for years with these channel checks, you'll see it firsthand how it's really affected. Right? Why is stock going up? And I went to XYZ company and I didn't see anybody at the store. Well, that's just stupid, right? Take advantage of that, right? And it's a good example of that. I'm taking advantage of it today, right? If he's telling you that AI is taking over 4,000 jobs, 40% of the company, shouldn't you be buying the pickaxe and shovels of AI? Shouldn't you be buying the things that make it actually work?
And Steve, when we talk about smart money versus retail money, we just also had the news that one of the other big things I got to talk to you about, obviously, is OpenAI basically raising at a $250 billion level. That's pension funds. That's, the biggest VCs in the world, the biggest market money managers in the world are doing what? They're putting their money into OpenAI. They're putting the money where their mouth is, and that part is big. Amazon's backing it, Nvidia's backing it, SoftBank's backing it.
Jeff Bezos made a stupid move. Sam Altman's stupid. Mark Zuckerberg is dumb for putting all that money into it. Oh, now they're chasing money. Now they're chasing AI. And I heard this so many times. Yeah, and Steve Langan just said, "Wake up, Fed. Labor is eroding. They chase inflation. Goes to the past." I agree. It's not about inflation, folks. It's about what's going on in the future. Inflation can be okay if you're catching up and wages are growing too. That's what we're supposed to do.
Yeah, inflation becomes the problem if you don't have a job.
Right. That's
the difference between it, in general is, if the job market really takes this downturn, even if prices go down, it doesn't matter, right? You still can't afford it, and that's what people are worried about. And
the old adage is it's a recession. If your neighbor loses their job, it's depression when you lose your job, right? That's the old adage we've always lived by for years and decades. And look, I grew up in the institutional side. I grew up on the retail side. I grew up in the government side. I see it all, right? I see all the news. I see all the flow. I know what's happening. Let's bring it to everybody. Let's show everybody what's really going on and not let the algos take over our world. Right now, Bitcoin has dropped from 70 to 66.2 over what?
Well, but that's just a halfback retracement, as I said in the thing. That's normal. That's a normal move for Bitcoin.
But that's because of the algos. That's not retail going, ooh, I can't wait to dump.
It was all liquidations, absolutely.
Can't wait to get rid of them, by the way.
We still got a while, but before I leave, I do want to bring you up to speed. As the ETF inflows were amazing, another $250 million yesterday. Yeah. But today is going to be the day because now we're seeing the drop. Was it retail who bought, or was it, again, sovereign funds and hedge funds that are going to have diamond hands? Outflows today to me are going to matter.
It's interesting. 2 weeks ago, the Financial Times had an op-ed about how Bitcoin is stupid, it's dead, it's dumb, there's no reason for it. And yesterday, the New York Times, Jared Bernstein made an op-ed. These are op-eds, folks. This is opinions of people who don't A, own it, B, who don't understand it, C, are old school FT and New York Times. Jared Bernstein, the guy's got more gray hair than I got, right? Stop it. You're not going to understand the future. And I like Jared, by the way. He's a good guy. I'm not going to say anything bad about him personally, but his opinion is dead freaking wrong.
They'll come around the same way we just had Howard Marks, right? Came out. He was the guy that said AI was nothing.
Crypto. Jamie Dimon hated crypto. Now owns it. One of the biggest owners of it, right? They get it. Wake the hell up, folks. And look, the dollar right now, the Dixie, I don't even have it on my screen anymore right now. Because
it's just a neutral. So that hasn't been a driver in this one way or the other.
Right.
You know?
Remember when that was a factor? Remember when it was, oh, well, it's only retail. It's institutions will never buy it, or governments will never buy it. Our government actually owns it.
Yeah, most governments have it, even if they just seized it. But, yeah, I mean, it definitely there. Steve, hey, it looks like I might be able to renegotiate my mortgage, buddy. So I'm a happy guy today.
Not quite there. You're not quite there, but
under 6 yesterday, so I'm getting close, real close. Good morning, Zora.
Where's your mortgage at?
I'm at 5.6, I think it is.
Oh, that's okay.
So I'm getting close. I might get there. If it gets back to October, I'm there.
Remember, you gotta pay fees, and I know they'll give me another.
No, I have a free one. I have the mine's all.
You have a free one, but you still will pay some fees. I promise you.
Yeah, no, yeah, but mine's pretty, because remember, mine was a builder incentive that I have built in.
Oh, and yes, you're actually right. You heard that yesterday from so many of my people that I had on yesterday, talking about how in Las Vegas alone, how the builders are telling you 3% right now. Because they own everything. They don't care.
Yeah, they're the mortgage company. They'll sell off the mortgage at some rate. That's the least of their worries. They'll sell it off.
They want the house. They want to say,
yeah, our mortgage has been sold twice in the year and a half that we've lived here, 2 years. Exactly. So yeah, that's the case. That is the case without a doubt that happens. Steve, Netflix, Warner Brothers. I do want to hit on that before I go too. You know, what's your take there? I like what Netflix did. They said, hey, listen, you crossed the line of where I'm happy. And, take a lesson from this, traders. Not everything's a bargain at every price.
That's correct. And here's what's really cool for Netflix. They get the breakup fee. So
yeah, $2.8 billion.
How many movies can you make on $2.8 billion?
Yeah, Netflix, a lot.
Netflix is smart. Paramount is stupid. I'm going to say it right now. Paramount made a dumb move. They're going to say, oh, well, we now own Superman. We now own Harry Potter. That's the past, right? Netflix was making a very smart move, saying, okay, you know what? We'll take on this, Warner Brothers. We'll do this. And we'll say, okay, we'll add that into our system and we'll build the shows, right? Paramount now has to not only pay a way higher fee, way more than it's worth, a breakup fee to Netflix, and then have to spend money to actually make these movies. Man, that's almost like Trump economics. I mean, that's like, I don't even know how to explain that one. And good Paramount, their stock should be just dropping. I don't know. I haven't looked at Paramount stock yet.
It's actually up today. Yeah, I'm a little surprised. The only one that was down was Warner Brothers.
Yeah, and of course it would, because they're not there's no more fight now. There's no more barbarians at the gate, right? There's no more fights. So now we know what the numbers are, and they got to pay all the debt for Warner Brothers. So. Zora, real quickly, Zora is asking here about why is PPI so high. Actually, yeah, Steve, Safe Flanagan actually you just answered it. Inflation's just a little bit down, not by much, but a little bit. But the reason inflation is still so high is because the world is still moving, right? People are still buying things. Trust me, no one's stopping buying at Amazon. Look at Amazon's stock price. No one's stopping going to Walmart. No one's stopping going to Costco. So PPI, producer price index. Okay. So understand that the PPI is producer price. Okay. That's the person that's the company who's making the stuff, is the one that's actually passing that inflation on. Right. And they're making more money. And remember, these are the same people who lost money in COVID, lost money over, so they're trying to make it up. And you also had weather issues over the last 3 months. So there's a lot of weird factors. And the government was closed. So how many factors can you add to this and still only up 0.01% month over month and actually down? So that is actually pretty good, to be honest with you. But inflation is still an issue here. It's still high for the Fed, but that's in the past. And you've heard several Fed members say this, that maybe 3% is actually the true number now, not 2%. Break that up, folks. I mean, this is why data is important. This is why old data is old. You got to think about the future, and they're not. The Fed is stuck in the past with old numbers, old ways of getting the data. Let's go put it on an Excel document. Nobody's doing that anymore, right? Get it together. Understand where the world is going, and you'll understand. I cannot wait. Right now, I have a grocery list waiting to buy. I'm buying Palo Alto Networks. Cybersecurity is going to go away. PANW. Look at the 200-day, 200-week moving average.
Right.
IBM is the hardware behind the back end. It doesn't matter what software you have. You still got to have hardware in the back end. That's still the pickaxe and shovels. I'm buying IBM and I'm buying Zoom. The whole world is still on Zoom, folks. Yep. Why is Zoom getting beat up so much? And I'm buying CoreWeave on this dip. That's the other pickaxe and shovels. There's my 4 that I bought. I'm buying them. I already bought them this morning on the dip, and you can already see CoreWeave already turning here. So look, I like this. Thanks for the dumb money. Dumb money doesn't make money. So I know you got to. Oh, you're okay. You still have time. But
a couple more minutes here, my man.
Yeah, but look, that's exactly right, Howard. And this is a Friday. Okay, so Friday sell off. Good. Take money, take advantage of it, right? I get it. I don't disagree that the economy is not good. It's not good. But the economy is not the stock market. People need to understand there is a separation here. The economy is not the stock market. And the stock market is only held by about 20% of the people in the world, right? Yep. Yes, you as a worker, and you have your 401k and your IRAs, and yeah, you do put money in, and we understand that. But this trading back and forth, this volatility isn't done by retail. Little, very, very little. It's almost all algos now, the machines, and you're fighting against the machines. So think like a machine, right? If you pull up your charts, I hate to say it, but linear regression is back on again. As I think as of last week, we started seeing linear regression again. Why? Because volatility started to slip a bit, and here we go, and I got to get back on the new numbers. And yes, my charts look a little bit different than they did yesterday. I made some changes. We'll talk about that, my part of it, when Steve Flanagan comes on here. But why? Because volatility is a little higher and volume is down. That means different technical indicators that go on your charts. So if you're still using the same charts, you're in trouble right now because you're hurting right now. I can tell you, if you're still using charts as your main way of getting ideas and trade ideas and making, you're really getting smacked right now, because CoreWeave chart told you last week to buy. I didn't think about the CoreWeave chart. I'm thinking about what they've said in the guidance. His guidance wasn't, the CEO kind of should have just kind of shut up. He actually made some very good points, but he went too far. So when you look at that, okay, well, they're the pickaxe and shovels. So guess what I'm going to do? I'm going to buy the pickaxe and shovels, because why? 0.03% of the world is on AI, and OpenAI, Anthropic, Amazon, they're all fighting over freaking Pentagon contracts and things that they don't even have yet. Oh my God, 0.03% of the world is on some subscriber of AI. I have 24. Why? I mean, because I don't need 5,000 employees on my look, he's right. He's right. Half of the people that he laid off were people that were redundant. If your job is just accounting, if your job is HR, you're going to be replaced unless you learn AI. You're going to be redundant. Right. Absolutely. And so here we go. Let's bring him in. I can't wait to hear Steve Flanagan.
Mr. Flanagan, good to see you. I'm going to let you guys go here. Have a great day and a great weekend, you guys. I'll see you first thing Monday morning, Quasar.
Fired up, Steve. Way to go.
Well, look, Steve, I see this all the time, and it's like, when I look at the world through these rose-colored glasses that our politicians are saying, here's the way it is. Trump's saying the world's great. Democrats say the world's really bad. It's not either one. It's right somewhere in the middle, and we need to think that way, right? We need to understand what's really happening. If the world is so bad, why is the stock market almost all-time highs? If the world is so great, why is inflation so out of control here? And it's kind of not. I know what you're going to say. I get you. But there's an in-between, right? And we got to find what is in between and understand that so that we can invest better as together, right? As a community. So, Steve, talk to me. Why are we allowing the news and social media to influence us so much? Because if you were to say to me, when somebody says, well, you're a part of the cult of Trump. Oh, okay, that's stupid. That's silly. That's just trying to be mean to someone, right? Or if you say, oh, you're just a liberal, that's trying to be mean to someone. We're not in a position right now where we're both trying to find you and I are, but the world in general is not trying to find some commonality to grow the world. that show of nonsense and lack of respect during the State of the Union is exactly what's happening right now in America. But we can be better traders, better investors, and make money off of this nonsense. Tell me I'm right or wrong, Steve.
Steve, you're absolutely bang on with the subject. And let's face it, an age-old expression, divide and conquer. And yeah, our politics, not only ours, global politics, has all fallen to this divide the people. Because when the people unify, then they begin to dictate to the politicians. And this is happening and will continue to happen, even more so outside of the United States, because people are gaining knowledge, information through this development of AI. It is bringing so much transparency right down to the desktop. Steve, you're at the forefront of this with Quasar Markets. And, you know, if we keep following these narratives, then what we end up doing is just chasing our tail round and round. I'm selling. Oh, now I'm buying.
Right. And we as traders are okay. Just so everybody knows, CoreWeave's CEO is on CNBC right now, so we are watching CoreWeave stock right now. But you're absolutely right. See, I'm a trader too. You're a trader. We trade. We trade intraday. We trade. Hell, I trade seconds. But yeah. I'm also got an investment portfolio that I never touch or I add to it. I mean, most people know I have a mutual fund that all I do is add to it. And then you've got these investments that we do that are swing trades that we go, okay, I follow the trend. I know what's going on because I went to Costco. I know it's hot. But it seems to me, Steve, that the politicians, the algos, the news stream is trying to get us to a point where we're at each other's throats. You and I, when we think about politics, you and I are pretty much on the opposite end of the spectrum when it comes to like voting. But when we think about the actual things that we actually think about, we're right in the freaking middle together. Fiscally conservative and socially liberal. Both of us are the same way. I believe the same way. I mean, I'm not a bleeding heart liberal, and I believe we should pay our debts.
That's right.
So that's why is the world trying to separate you and me as friends? That's nonsense. Now, obviously, you and I will never be separated because of that, but that's what the world's trying to make us happen to do.
Because, Steve, it's simple. If you and I and all the people like us on both sides of that middle, if we all unite in a common front, just think how powerful we the people become. It's evidenced everywhere in the world. Look at the European bloc and all these countries that are beginning to just throw politicians out. And I'll just evidence it by one single thing. You have the new chancellor of Germany basically saying Europe has failed. We need to change it. And Germany.
And you have been saying that for so long, and they're waking up. Why is it that Europe is waking up? They're not the ones that usually wake up. They're the ones that have the old school thinking, and they stay the same way and not change. And we won't say her name too many times on here that she was that way for how long. And you know, now they're waking up.
Because the fringes in the political spectrum have been getting larger and larger voices.
Yes, I agree with that.
So now the center politician has to lean left or lean right in order to attract the narrative. And what we're seeing all around the world is them leaning. But what's happening now, Steve, is the thing you've been pounding. Common sense is finally returning, and I believe it's AI that's leading it. For example, the narrative, AI is like overdone, it's going to fall apart. Why are we, as you've just said, why are we so close to all-time highs with so many different stocks? Because let's dissect and put the narrative aside. People are rebalancing their portfolios.
I agree with that.
Simple. Is AI a good buy? Absolutely. They're selling it into the dirt. If you have an investor point of view, you're buying this bottom, but you're also saying, if the market is rebalancing, buying the pick and shovels, as you have said, then that's a very good thing for the general picture that you're investing in. So
We're hearing reports real quickly that BMW is going to put humanoid robots on the production line at the German plant. I mean, my God, you can't even make this up, Steve. You were just talking about Germany getting ahead of the game here. BMW is a German company. I have an X5, and I will tell you that, you know what? They make good cars. They do.
You know, and let me just say to the viewers, you know, when you go, oh no, like Jack Dorsey lays off, and everybody goes, oh no. Listen, my career in 2002 came to life when automation began to take over trading. And I became part of that giant wave by you always have to have a human behind the helm. Now, generative AI will come and there'll be new intuition, parts of AI. But will they ever allow the computer to actually make the decision? I don't think so, because then that becomes a regulatory risk everywhere.
Yeah,
so
I agree.
When you begin to see BMW doing that, I mean, why not? If you're a BMW shareholder, a robot can sit there 24 hours, 7 days a week, bop, 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 and punching out production. When you punch out production, you as a company, as a country, get more productive. When the country gets more productive, the country grows, which means opportunities for everybody. We can't just look at this through this narrow lens that the narrative wants to tell us. This is a good thing, bottom line.
I don't know what else to say. I mean, that's pretty much exactly that's what we think. I mean, I don't, that's it. You got it right.
Yep.
All right, I'm going to switch over. Yep, go ahead, Steve.
If countries fall behind, then you're going to begin to see changes. I'll throw a country out there right now, the UK. They just lost a by-election parliamentary seat that they have held, the Labour, that's the prevailing party in power, that they have held for 100 years. Now, the UK is falling so far behind the curve right now, and you've got interest rates peaked all the way up at the top at 4.25% in the bank, 3.75% in England. They've got a meeting coming up in 2 weeks. Let me tell you, this next week is going to be crazy. Volatility is up, and I believe that it's going to stay up probably for the next 3 to 4 weeks through the month of March. But with all these central banks coming to task in 2 weeks' time, middle of March, you know, how could you not reflect the labor situation deteriorating? Let's bring it to Canada. Fourth quarter GDP minus 0.2%. You know, Switzerland plus 0.1%.
Yeah.
How is this acceptable in the world with no growth? France, 0.2%. This is unacceptable, Steve. We're talking about the people moving to center. You've got to start focusing on the people, and that means bringing it home to the United States. The Fed has got to wake up, stop chasing the inflation ghost of past, and recognize that they need to support the labor market. Otherwise, the labor market deterioration is going to force their hand. And yet again, who needs a Fed if you're just constantly going to react every time instead of trying to look, see, and get out in front?
Agreed. Steve, is there anything here that you're actually buying on this? I mean, the Dow futures down 535 points. NASDAQ down another 250. We're down to 49,000. Yeah.
Equity-wise, Steve, you know, I played NVIDIA ahead for the last 5 days. I bought.
Yeah.
I sold it all in the aftermarket above 200. And I've bought it all back in here, 185, 187. Yeah. So I'm a little underwater on that new position.
Yeah.
But, you know, I'm not jumping in full boat. You know, as an investor, I own tech.
Yeah.
As you were saying, I'm adding little pieces to trade and catch. I don't think this downdraft is real, but it may last for another 5 or 6 days. It may last all through next week because sentiment is negative. Again, go to an experiment. Go into any major of the news wires and take 10 headlines and score them yourself. Is it a positive? Just look at the way it starts off. Right now, PPI higher, Fed's on hold. Is that necessarily true? PPI on an annual basis was actually down. So why would the Fed be on hold? Because of a monthly number that jumped. So this is what I mean. If you react on headlines, the narrative is negative, you sell. Why is it negative? This is a new phenomena in the hedge fund community using AI to make social media sentiment. And the more negative social media is, the more they sell. And it reinforces one another. I would think in 6 months' time, this will be old school because people will be talking about it. But I'm giving you a heads up on some of the things going on right now in the marketplace. Hedge funds want to make money. That's it, period. What I worry about as a risk manager, that they may force this and trip the market over where selling becomes I must sell. And when people must sell, that's when you usually get one of these spikes.
That's right, and cleans up. Okay, we got about looking at the clock here in front of me, and I've got about 60 seconds now to the open. I posted the stocks that I'm buying this morning. CoreWeave, I know you also own for everybody else. Steve also owns CoreWeave here, getting beat up a little bit here this morning, but I'm buying this dip here. I like this. I'm also got Palo Alto Networks. I had Jim Iorio on yesterday. He likes it down here. I'm buying a little bit more IBM as well, and Zoom Communications yesterday. Everybody's on Zoom. I don't know what that they added so many people, millions and millions, and I like this dip, and I'll tell you why. Because that's where the buyers were back last year in the summertime. That's where the buyers are. Look at that sell-off. That's a little too much. You can see here where the buy went too high, so came down. Same thing when the buyer stepped in. So I like this. This is a daily chart here. So I'm liking the buying here, and I'm buying, and I'm waiting for the open. I sometimes buy on the open. For those of you who don't know what that's a cow order. That's market on open. Market is open now. We are open, and I will bring the cues up. 1 second charts here, and there we go. And that's what I thought. The buyers are stepping in here.
Yep. And, but look at the setup, Steve. The setup was negative coming into New York, right? Again, watch these pre-market, post-markets. This is markets that the institutionals run, and they create a narrative before the open. I suspect today should be a down day in the early morning hours because the headlines have been very negative. Now the Fed's going to be on hold, they're going to say.
I'm buying CoreWeave right here, Steve. I'm in here at 80.50 here. We're at 81.05 here. So I am along CoreWeave now.
And you have to keep in mind it's a Friday. Steve, I like to load up on volatility risk for over the weekend. And March 1st. And guess what that means? That's the deadline date, I believe, that we gave Iran. So I'm a little concerned that March 1st or Monday morning, by the time we walk into trading, something could have happened had we not seen progress in these talks.
Yeah, I'm buying a little bit more CoreWeave here at $80 here. I like this buy down here. So I am now long CoreWeave here. I bought some shares of more shares of IBM here at 237.19. We're 237.50 now. And I did buy some Palo Alto Networks here at 146.97 and a little down on that one. But I do. Oh, look at that move on CoreWeave. Come on, baby. Pop back up there on Core. Get back above 81. I like that move.
This is one of those days. You take the money and run when you get it. That's, because one headline could change our sentiment today.
And I think the selling is nuts today. 81.33 now on CoreWeave. Thanks you for your paying attention here to CoreWeave here. 81.50 now on CoreWeave. 81.62 now. 81.76. 82 now on CoreWeave. There you go.
And Steve, if I recall, their earnings were not bad at all, right?
Oh, they were good. I think the guidance was a little off, and I said that this morning, and I talked about it from the perspective of the CEO. Maybe he should have talked. Maybe he should have been on CNBC this morning. But I do like this, and I like look, they're the pickaxe and shovels.
Yep. It's amazing how this market gets behind. I don't think you could have forecast a better NVIDIA outcome. I am long NVIDIA, and I'm not getting scared at all. Right. And you couldn't have asked for better earnings results, and to see this sell-off, it is not based on facts. That's for certain.
I agree with that. Yeah.
That is just basically.
Or are we slipping a bit here?
A rebalancing of a portfolio. People who are very long are saying, I prefer to take some profits and move into some other things like you're mentioning, picks and shovels.
Yeah, IBM pushing here now. IBM now 238, 236.89 now. The Qs are pushing up here, 605 now.
I mean, just look at IBM. IBM will be the center of quantum computing at some point in time. And I evidenced that by look at INOQ. Their earnings were pretty damn good. That stock flew to the upside. You begin to see quantum come back in. Big Blue is out there, and they will lead that market at some point.
All right, let me get you the exact numbers here for me on CoreWeave here, where I am located at. So I have a few orders that I've put in. Yeah, so I am long about 80.30 now. So that's where I'm at, 79.83. Dollar cost averaging. And you've heard it, folks, so many times from Steve Flanagan talking about if you like it, just dip your toe into it. If you don't, then, but dip your toe in and see if you like it. If you like it more, and we're already back to 80.60 already now on CoreWeave. There's going to be some volatility in here, but I do like this because if you look at the QQQ, you're already seeing a push now on the Qs back up now. Dow down 500, NASDAQ down 1.12%. I think you're going to see some buyers stepping in here. I get it. It's Friday. I get it. People are nervous and scared and want out and blah, blah. I want to be the ticker taker, right? When people are running for the doors, I'm the one buying their shares. Love this.
If you're trading scared, then that's bad because you got to, when you trade, you cannot trade with with an emotion. When you're fear, it's the worst emotion to trade with. Better off just running for the exit, sitting flat.
Well, the old adage that Warren says all the time, or said all the time, was if you can't take a 10% hit, you shouldn't be in the market anyway, right?
Yeah, right. That's right. And there's 3 positions to trading: long, short, and the last one is square. And sometimes we used to say on the desk all the time, it's hip to be square. You don't got a view, don't trade it. Don't force it.
I always say, and I learned this, the old one, sit in your hands.
That's right. Exactly. Same thing. We would always, because, you always had a keyboard and, we'd be doing, upwards 5,000-10,000 trades a day. And you'd say,
did you guys hit that? 5,000 to 10,000 trades a day. That's the difference between 1 or 2 or 3 or 4 or 10 that I do. I'll do maybe a couple hundred in a day sometimes. How many, Steve?
Yeah, thousands, 5,000 to 10,000 automated trades, but then you would add in quite a number, a couple of thousand automatically. So, we would say, put the keyboard aside, step away from the desk.
Go to Harry's and have a drink, right?
Well, those were the old days, Steve. The old days, you'd do a lunch and come back and check out.
Push the button, sleep on the desk, and hit the button as hard as you can. All right, 81 now on CoreWeave. We are still watching the markets here. Look, the Qs are still holding here. There's no more selling going on here. I think that you're going to see maybe the desk go, you know what? Maybe we should be buying down here, picking some of this stuff up here. I like this move here. This is good. 604.35 now on the Qs here. There's the 1 second chart. And there we go. There's the pop a little bit. Could pop right back up there. We do see where the sellers are. We know where they are. But I'm not scared here at all, Steve.
Wow, look at that pop. Ooh.
81.30 now on CoreWeave. So those of you who got in CoreWeave with us, you're smiling to the bank right now.
And I'll always say, you know, around 1 o'clock in the afternoon, that's when, if you had the view and it hasn't materialized, reevaluate and take a new look, because then you start to get the closing, and then the sentiment begins to build as the machinery now begins to say, we've got a hedge.
$81.50 now on CoreWeave. I'm buying a little bit more IBM here on this dip here. I like this. Spot gold now 52.22. The tick now down 400. I like this. I'm gonna take advantage of that tick. 82 now on CoreWeave there. For those of you who are playing at home, thank you very much. Thank you for that free money, folks. Join us. We're killing it.
Yeah. You know, I have such a clear vision of where we're going. I just got to get through these pitfalls, and we're in one. As you said last time on our last show, beware the Ides of March. I'm a little worried through the middle
me
of
too.
March.
Yeah.
You know, I want to see April. I really want to get to April, because that's when I think clarity begins to show.
And what Steve was trying to talk about is it could also be some selling due to tax reasons too as well. There's a lot of things going on in March. March Madness. There's a reason why I call it March Madness, not just because of basketball, but yeah. CoreWeave right. Now 82.30 for those of you who are playing at home, but playing it with us 82.40 now. We did it again here. Yesterday we crushed NVIDIA. Today we're at 82.44. Hey, here we are, Steve.
Beautiful. Nice call, Steve.
82.56 now, 82.61, 82.64. Now, Steve's going to tell you, and I agree with him, put a stop limit in. You know where your limits orders. You know where, now that we're long and we're making money, put a stop and let it go. 82.74 now, folks. Now the highs of the day here, 82.62 now, near the highs of the day. 82.80. 80. Come on, let's get back up there. 84.80 where the high of the day was. That's where it's going, right?
Absolutely. And
83 now.
And what I always like to do is, if I went in with two, I take one off, and now my cost is that much lower on my one, and I put a stop loss way up, 82 level, and I say, look, I can't lose money on this trade anymore.
81.56 now. Now the sellers are stepping in a little bit. Look at the selling there. Probably some silly news.
Wow, this is ripping this. Woo.
I like this, Steve. I like this kind of moves. This is fun. A little too fast, but I like it. 82.10. There were some sellers in there, probably taking some profit off, but I'm still long. I like this thing. I think we'll go right on higher on the day. Okay, IBM, yep, pushing NVIDIA down 2%. Unity Software down 18.61 there again. So I like that one, man. God. There you go. Cantor Fitzgerald now maintaining it with a $131 share price at Cantor Fitzgerald. So they're not changing their thought process there.
Yeah, that's one you got to keep on your radar. Watch them carefully.
I like this Palo Alto Networks move here. I think I'm going to buy a little bit more here, Steve.
And that has been absolutely hammered, hasn't it?
Yeah, and it's on the 200-day week and month and day, and I like that. And I had Jim Iorio on yesterday from Chicago. Everybody knows Jim. Jim's a massive trader, trades literally every day with us. I'll do that again, PANW for everybody. And you can see exactly what we're meaning by that. If I pull up a day chart here, there you go. There you go. This is what he's talking about, right? There's that bounce there on the 200-day and the weekly. There you go. All of it. See there, 200 week. Bouncing right off of that. I really like that move there. So that's a good move for us. I do like that. Dow down 644 here, NASDAQ down 1.2%, and the SPOO's only down 1%. So the broader market is not down nearly as much. an advanced decline down 3,200, which tells me that the market's not as negative as everybody thinks it is. It's just here in the text, which we can take advantage of. Tick only down 445, and spot gold. If that's the case, shouldn't it be at 6,000? It's not. It's only at 5,200. Can't seem to break out of that. So I like the 82.18 now on CoreWeave again.
You follow the narrative, and it's been rewarding you for probably the last 6 to 9 months, if not more. Yeah. But eventually that narrative is going to be, and I like to call it, it's like the Pied Piper. Everybody remember that one? You get down, well, all of a sudden you're falling off the cliff into the water, and that's the end of it. So do you want to just be led? I know it's been profitable. You follow the narrative. It's kind of, it's a self-fulfilling. That will change at some point. And that's when, whether you're an investor, if you're a day trader, I got it. Follow the narrative. But when you're investing, you've got to start, pushing the narrative and using it to your advantage. Palo Alto would be one of those. That has been so negatively blasted. Everything you look at has been negative over the last month.
And it's cybersecurity.
Yeah.
I mean,
go figure.
Right.
Probably one of the most important fields of our future.
I'm glad to see the Paramount, Skydance, Warner Brothers nonsense is finally over, and we're not getting into that world anymore. So I do like that. That's the barbarians of the gate kind of feel right now. I'm glad that we're 82.50 now again on the, yeah. All right, I'm feeling pretty good here, Steve, on all this morning buys here. Down 700 points here though. Q's now getting slapped again.
Yep.
I think it's algos that are doing it. And CoreWeave beaten up as much as it was down about 19%, now only down 15%. There's a nice move pop there. You got it.
And the importance of following the chart like Steve's got up here is if a machine which dominates our trading activity, algorithms, they basically are looking at what's the next price. If I buy and the next price is higher, I'm good. I'll buy a little more. Next price higher, I buy a little more. The moment you begin to see the turn, so in looking at those last 3 bars, if we break below that red bar, the last red box, then you'll see the machinery all of a sudden start to dump.
Yay.
That's the way these algorithms go. Why can I say that with positivity? Because in my career, I helped build them.
That is true, you did. It's pretty quiet, Steve, though, considering that now that the move's been made, it seems like now the markets are just seem to be dying, and now the narrative seems to be out the door now.
That's right, Steve. And everybody's waiting. Is there anything else coming in? Has the kitchen sink been thrown in? And I would have to say that we're getting very close to that point where there's nothing more you can say.
Look at this. These are pushing. Yep.
Especially when you begin to look globally, Steve, which is my field in the currency markets, and you look around the world and you're like, well, United States, okay, GDP it was so much lower. But show me a spot in the world where there's a real bright spot, and there aren't. So we like to look at the lens of the United States and focus everything on it. But when you begin to look at all the institutional investors, they have a lot more, views that they have to take in.
Man, look at this CoreWeave. I think we could get back at 84 here soon, Steve.
Yep. With the 10-year under 4%, I don't have a quote on it right this second, but you have
there
to.
It is, 84. I just did it right there. 84.23. 80. Look, folks, this is what we're doing. 84.27, 84.30 now.
Yep.
Wow.
And you're going to get right back into all that consolidation on the left-hand side.
Yeah. Agreed. 84. Come on, baby. Break the highs of the day. Let's go. That's institutional buying, by the way, folks. It's not machines buying. It is machines selling. Some of that could be, but that is institutions trying to buy cheap shares here.
Well, institutions are machines, Steve.
That's right. I agree with that. So I'll stand corrected on that one.
Yeah. You know, when these big guys begin to buy, they look and say, well, what's the best way? They plug it in and they say, the algo says you need to buy X amount over the next hour. We need to do a minute-by-minute purchase, you know, and they look at where's the best liquidity, when's the best time that I can have minimal market impact, because they're shifting very large size positions.
They are, yeah, I agree.
And that's why I always say you want to focus on when it's up, 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 then it's sideways. When it goes up, just like this chart, that's algos that are going, okay, it goes sideways, but they have to buy. And they're on a time frame. And when it goes sideways, they're on every bid trying to buy it up. But as soon as it starts to break again to the upside, boom, 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 in they go, and they have to get back in the market, which creates the next leg.
February Chicago PMI coming in at 57.7 versus 52.5. So another PMI number coming in that's kind of pushing up a little bit.
And everybody will wake up, Steve, by the end of March and April, and all of a sudden say, wow, for the last 3-4 months, industrial production's been doing well. Isn't that what United States was trying to shift? More
marketing, manufacturing, absolutely.
Oh, well, what do you know? And then then everybody's going to have to chase, and we'll have missed this rounding bottom that we're in. Right now, if I'm a buyer, next 4 weeks, I'm waiting for the spike lows. I'm waiting for the machinery to overdo the downside, and that's where I want to step in and buy again. Use the machinery to your benefit. It always overshoots both sides. Got a lot of things coming up in the middle of March, as I've highlighted a couple of times, but I'll just say it again. We start off on the 17th with RBA, probably at 3.85%, probably after the recent 0.15 increase. They may stay on hold. Then you've got the Fed on the 18th, ECB on the 19th, Bank of England on the 19th, Bank of Japan on the 19th, Swiss National Bank on the 19th, and Bank of Canada, along with the Fed, on the 18th. Based on that number out of Canada, there's an inkling now that they may end up cutting. I think that the Fed has got to start reflecting labor, and they've got to probably put a cut in as well. Reinforce the Fed needs to participate with the economy and support the economy. Right now, labor is deteriorating, especially if we look at the revisions for the entire 2025. The Fed just totally missed the boat. Now, they can stand and do nothing, and Jay Powell can go out on a down note, or they can get out in front of the marketplace. I believe they will. I believe that you could see ECB maybe indicate that if inflation doesn't pick up, they may have to cut the next time. They want to hold at 2%, but the inflation is now running at 1.7%. So they are actually beginning to discuss, oh boy, deflation in Europe. And the Bank of England is now faced with a real dilemma, political uncertainty, and consumer confidence just dropping again and again each month. They're going to have to cut. So you could end up, as we head into April, with a very positive sentiment shift in the marketplace.
All because of Europe?
Well, I think the United States has got to pop it here. I think we've got to cut 0.25%. People may say this PPI number, but PPI annualized was lower.
I agree with that. They're missing the big. And if you dig into the data, the news, you actually realize that actually inflation has actually come down a little bit. But you don't know what the Fed's going to take grasp on. They're trying to grasp on those numbers, Steve, that inflation's still up.
It's a ghost, Steve. You know, you've got to start looking at your other mandate, and that's labor.
Yeah.
And guess what, guys? You missed your entire forecast for 2025. You can't have Jay Powell at Jackson Hole, where all the central banks of the world and finance guys go, saying that labor is very strong. What the heck were you looking at, my friend?
Yeah, labor is not strong, folks. That's a pretty obvious thing there.
15,000 was the average job creation during each month last year. That's not a strong economy. Not when you're basing coming off of 100,000, 200,000 job creations a month.
Palantir is actually up on the day here, Steve. It's green, PLTR.
I'm loving Palantir, Steve. You know, I hope they, go with Michael Burry, and I want to see it a little bit lower because I want to add more. I
agree with that. I like, and that's exactly it. Your patience is paying off, I think.
You have to be a patient investor. You just don't jump in. And again, if you do feel the urge to jump in, if you're going to put $10 in the market, then just put 2 in on your first buy.
And we've talked about this one on Palantir. You know, look at that. Now you got another rounding bottom here coming up, and now you're seeing Palantir pushing up again. So I do like this move here.
Lots of tops, just like the dollar index. Lots of tops out there that you've got to get through. But once you see the higher lows in place, something's got to give. And just because you flub on the upside here and you begin to break off hard, because remember, everybody's looking at the chart. Now you've got technical models that are automated looking at charts. So just because you flub doesn't mean you give up on it. You still have a view. Let them go ahead and spike low it. Put a really sharp bar in on the downside, then follow it. Again, watch the closes, because the models and the machinery all use closes. You have to have a definitive close. The daily close is universal across the marketplace.
QQQ now only down 0.8% here, and you look at the Qs. The Nasdaq itself is down 1.09%. So the buyers that are buying the ETF and not buying the overall broader market. So
that's right.
They're telling you, the buyers is telling you, we're buying this dip here, and I think the Nasdaq will probably started pushing back up here.
And Steve, you're so right to point out, if they're buying in the ETFs, you've got to be very careful, because this is where the big boys can punch a market. And what do I mean? You buy an ETF, you buy one share. That ETF, let's say it's technology. Well, then that one share in the ETF has all these daughters off of it that have to go out in the market. So if you suddenly go into an ETF and buy a large chunk, it spits out a basket of orders out into the marketplace. And you and I may be focusing on individual stocks, but they go out and do the basket because they can attack large liquidity by hitting ETFs and taking in very large position sizes without being detected.
Yeah, I'm liking this, the Qs here. This is a 1 hour chart. It's still a 3 minute chart here. We're seeing a little bit of selling here going into the top of the hour. It's probably see a little bit more news coming out, but I think the selling was a little over here, and I think we might see a little bit of buying going into the close as shorts have to cover a little bit. I think a lot of this is just shorts. I don't think it's actually pure selling.
Agree, Steve. And so right now you're in the first half hour of trading, just coming to conclusion. Now you watch where the lows are. Keep watching your charts, looking for what the previous low was, and then watch accordingly. If we break the previous low, yep, you're going to start spilling off. But, watch where you opened, and that, of course, is the pivot point, your daily open. It's a Friday. You've got to be aware that the weekend risk and United States and Iran of coming close to the deadline. We gave them, I think, 10 to 15 days. March 1st is day 10. So anywhere between Monday and, Sunday and Wednesday is where the deadline goes. So watch for comments out over the weekend. Any breakdown in talks, you know what's going to happen.
604.29, 604.37. We might push up a little bit here. 2 minutes, 3 minutes now to the top of the hour here. There we go. There's a turn. Look at that rounding going in, folks. Check out the rounding. Boom.
And again, at 1 o'clock, with 3 hours left in trading, that's when you want to make, do I want to hold this position over the weekend, or do I want to just take what the market gave me?
As we call it, sleeping with the piggies, right?
Yep, that's right. Take the money.
I learned a lot. It's funny, Steve, as I go through this, even the days I still trade, I still see all of my mentors and all the things that they would say, and I picked up and I said the same thing. It just comes out really easy.
Oh, geez, Steve, sometimes I have a chart on my desk with just the sayings that we used to say, and they all still hold a tremendous amount of relevance today. And that's it. That's that keeping it simple, right?
I also had like all the animals of the markets, right? Bull and bear, we know, but ducks and oh my God, you just shot a goose and all the things. It's just like, oh, you got a tiger now. You got a tiger here. You got a tiger. He's running. He's a tiger. I mean, I've heard them all, baby.
Yeah, bulls make money, bears make money, and pigs get slaughtered.
604.73 now is accused, trying to push up again here. 52.25 now here, spot gold now an ounce, and WTI 66.92. Cannot break that $63 handle there. 65.874 now on Bitcoin as it slipped a little bit from the 70,000 handle when it came down. Advanced decline line now sitting at 38.77, the negative side, and tick now down almost 400. And Steve, it's 10 o'clock. Do you know where your market is? You know where your market is?
That's right. Have a great weekend, Steve. And I'm going to say keep an eye on sterling. 134.71 was last week's close. We are setting up a close under that. I think sterling might want to lead the dollar up, meaning sterling down, dollar up. I like the dollar index here at 97.80-ish. I'm still looking for a test of 98.15.
All right, so that's what Steve's talking about, 134. There you go. And just give me a quick update. We think about the Dixie here, Steve. You think we push higher, or are we range bound here a little bit?
Steve, I think we're kind of in the sideways pattern. I am looking for a test of 98.15. I don't think we're going to really decisively break. There's too much information out there. But, sitting around 97.70 right now, I'm more inclined to be buying here. But again, I'm not taking any positions in the dollar over the weekend. I want to be clear about that because I see too much weekend risk. I prefer to reach in on Monday and reestablish a dollar long. My dollar long right now is looking at sterling.
Okay. I'm liking this a lot. And I can see why Steve's saying 98.15. 98.15 will be up there. A test, that's the highs, folks, right there. And you can see we are flagging it because nice big pennant there on the 1 hour. And if you push it out, once you do that and you put it out to the daily, you'll see here what Steve's talking about. And it's what he means by going sideways. We're not seeing much outside of that. So totally understand, Steve. It's very smart. I like this move. I see why Steve's saying 98.15. So right up here where that last bit of selling was, if we can break that, Steve, we can go right on up to 90, almost 99 again.
Yeah, I mean, you'll have 98.41 next level, and then 99.15, as you say, is the big one, Steve. What I love about a sideways consolidation pattern, again, I keep my analysis as simple as possible. When it goes sideways, buyers and sellers are having a battle, and nobody's winning. When one side breaks, if it breaks up, the buyers win.
December's construction spending coming in at 0.3% up. Expected 0.2%. Steve, you're right again. That should push the markets up there. I think the markets are wrong. And maybe why we're seeing a little bit of inflation, a little sneaking its head in.
Yeah, there we go. But, watch the consolidation patterns. When they break, there's always a follow through because one side loses. And that's why I look at those.
James, see, yeah, Nvidia down. I like Nvidia. I'm still a buyer of Nvidia. All right, folks, the top of the hour. I got to run. I got a meeting, but thanks so much for watching, and we appreciate everybody. Good numbers again today. A lot of you watching Quasar Markets Live. Thanks, Steve. I'll see you back here on Monday.
See you.